AT&T has a massive debt load of over $143 billion. Is that going to threaten its dividend payment and its robust dividend yield? Well, that's what I'm going to talk about in this video, looking at AT&T's financial metrics, but also some commentary from AT&T management to highlight what's really threatening the dividend and is the dividend protected. So let's get right into it, looking at the numbers. And I already mentioned AT&T's total long-term debt here. I have it at 143.28 billion. That's a massive debt load, and it's similar to its main rival Verizon. Verizon also has nearly $140 billion in debt. But when you have a company that has sticky recurring revenue and cash flow the way AT&T and Verizon have, that can support a higher debt load. So because AT&T and Verizon's customers are very sticky, these customers are over 99% recurring revenue, right? Their churn is less than 1%. Less than 1% of their customers cancel and switch or leave. And so when you have that kind of customer, sticky revenue, strong cash flow, you can support a higher dividend. And that's what we have here. Look at AT&T's free cash flow annual. Now, this latest year was troubling in that their annual free cash flow dipped from over 25 billion in 2022. It fell to 12.4 billion in the most recent year, ended in 2023 at 12.4 billion. And if you compare that with its dividends, AT&T paid out dividends of $9.86 billion in 2023, but that was less than the overall free cash flow of 12.4 billion. So the company, again, let me reiterate, it generates a lot of cash flow, and so it can support a dividend payout because of its over $12 billion in cash flow that it earned and the $143 billion debt load in the interest expense that it generated. But now let's look at AT&T's commentary, management commentary in its most recent quarter. Management highlights that over the last 3 years, they've reduced their net debt by about $20 billion. Net debt meaning the cash also compared to the overall debt. And they now expect to use an increasing amount of their free cash flow after dividends to accelerate their debt reduction efforts. The key there is to use their free cash flow after dividends, right? So management is saying, hey, we're not touching our dividends. We're going to pay our dividend, and then the free cash flow that's available after that, we're going to use that to pay down the debt. And we feel good about our ability to accomplish this goal while providing an attractive dividend. So management is confident that they can reduce that debt but still pay the dividend. And that's because one of the main reasons is that their overall free cash flow is expected to increase as their capital investment needs are also expected to decrease. Since July of 2020, they've invested about $65 billion enhancing the 5G and fiber network at an historic pace, right? So this was a generational, or not generational, I should say, generational in terms of the company's technology, right? They had the 4G, which was the last big upgrade cycle, and now they had the 5G, which is the most recent upgrade cycle in the last 3 years. But this is going to last several years now. So they invested in 5G, and that's going to last them several years. And so they're not going to need another big boost like this in spending enhancing a network, right? So they've done the investment. Now it's time to reap the benefits from that investment. And so that increased the capital spending, but now that they've done it, now it's time to get that return on investment, absorb that cash flow, use the cash flow to pay down debt, to pay out investors, to pay out the dividends. And so investors can reap the benefits of this investment over the next several years. So to answer the question, is AT&T's massive debt threatening the dividend. It does not look like that's the case. It does not look like it is threatening the dividend. It looks like the dividend is safe from the debt. Like it seems like management is treating the debt as a secondary priority, right? So it looks like it's management is prioritizing dividends, and then whatever is left over in terms of cash, pay down the debt. So it's dividends first and then debt. So it does not look like it's threatening just yet. Although just from the sheer size of the debt, the 140 billion, it's still a concern and still something that AT&T dividend investors should pay attention to, and it's definitely something I'm going to keep updating every quarter as AT&T gives us more information about its cash flow and debt overall. But that's it for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.